The last remaining quantitative disclosure information we need to handle is our lease cost disclosure for the reporting period. This will include our operating lease expense, the amortization expense for our finance lease right-of-use assets, the interest expense for our finance leases, our variable lease expense, and our short-term lease expense. There are others like sublease income or net gain or loss recognized from sale and leaseback transactions, but subleases and sale and leaseback transactions are advanced topics that we won't be covering in our foundational series here. And there is very little work that we need to do to find this information. Because we've set up accounts on our P&L for each of these items, all we need to do is pull it straight from there. Now, we could certainly calculate this information in our workbook, but there is one specific situation where this does get a bit tricky. Recall that we covered a situation earlier where a lease changed during a modification from a finance lease to an operating lease. It was our equipment lease I have pulled up here. It began as a finance lease, and then when we modified it, it became an operating lease. Well, ASC 842 requires us to present our lease cost as it was recorded at the time. So if our lease was a finance lease for the first 4 months of 2026 and we're reporting for 2026, we'll need to include the amortization on the right-of-use asset and interest on the finance lease for the first 4 months in our finance lease cost disclosure. And if that same lease is then modified and becomes an operating lease, just like our equipment lease did here, for the next 8 months of the year, we'll need to include the expense from the last 8 months of the year in operating lease expense. And there really is no reason to get into these complicated calculations in our workbook. We can pull all the information straight off our P&L for the period. So if we want to report 2026, let's pull up our 2026 income statement in our ERP. You can see here we have everything we need. Here's our operating lease expense, here's our amortization on our finance right-of-use assets, the interest on our finance lease liabilities, our variable lease cost, and if we had any in 2026, we would also see our short-term lease cost. So between our workbook here that calculates our supplemental balance sheet information with weighted averages and our maturity analysis, along with the expense information on our P&L, we have all the quantitative information required to be disclosed under ASC 842. So that means to clean this up, we can actually delete the beginning date input up here. We never ended up using that. We would if we needed to calculate our cost here, but like we just discussed, we'll pull that right off our P&L. And then the last thing we need to do to wrap up our workbook is go add a description of all of our worksheets to our About tab. So first we have our periodic journal entries, and we'll say calculates a journal entry for each lease for any given date. Then we have our disclosure. This organizes our disclosure information for all leases. Then we have our current leases. And here we have our schedules for all active leases. Then we have our archive leases. And here we have our archive schedules for any remeasured lease. And finally, our short-term leases, which unsurprisingly holds the schedules for all our short-term leases. And with that, we've come to the end of our series on the foundations of lessee accounting under ASC 842. If you've made it this far, we just want to say a massive thank you for the time you've invested in this series, and hopefully it's been helpful. We covered all the foundational topics for lessee accounting in accordance with US GAAP, from identifying our lease, separating and allocating consideration to our lease and non-lease components, classifying our lease, the initial measurement, and then the subsequent accounting. And we spent quite a bit of time on subsequent accounting, covering our ongoing periodic entries, lease reassessments, remeasurements, modifications, terminations, and impairments. While doing so, we looked at variable lease payments, renewal options, purchase options, residual value guarantees, lease incentives, and short-term leases. We learned about some practical expedients that can make our lives easier as we account for our leases under ASC 842, and looked at all the disclosure requirements for a full set of US GAAP compliant financial statements. As we did so, we built a workbook that can do most of the heavy lifting of lease accounting for us, and calculate and track our lease liabilities, right-of-use assets, lease expense, and short-term leases. It includes some checks to make sure everything is accurate, and helps us put together our required disclosure information for a given reporting period. And hopefully, it can be a template you can use to make accounting for your leases a relatively painless process. So thanks again for working through this with us, and please don't hesitate to reach out on the forum with any remaining questions.